Hello viewers, welcome back to my channel. Today I'm going to discuss something very basic but it's very important. Before I started investing in stock market, I used to wonder who does control the share price? Who set up the price? How does it really works? Is it a group of people who set up the price? Or is it some brokers? Or is it a computerized algorithm system? Who does control? I did not have any clue when I started investing first. So slowly, I got to know how does it really works. So I believe after watching today's video, you will be in a better position to understand how it works. So before we talk about today's trading system, let's talk about the past, how they used to trade in past. Before, the brokers used to go to on 11 Wall Street, that's how the term Wall Street, and all these brokers used to go there and trade on the floor, which is called open outcry trading. So what used to happen, you'd see all the trader used to call out their price, buying price, selling price. When there is a match, then they do a trading. So what they used to do, they write it down manually, and end of the day, they used to settle the price, settle the transaction. That's how it used to work. People like you and me, when we wanted to do any trading, we had to call our favorite broker and tell him, yes, I think this is a good buy this amount of share for me. And the seller used to call his broker and used to say, yes, I think this is a good sell. This is a good price to sell, so make a sell. It was more of like a phone game in real life. This cartoon was made by economists, and this is exactly how it used to happen. Let's have a look on this cartoon. Like all the buyers was making buy, and the seller would say sell, and it was a huge noise and very chaotic. But imagine, is that possible now? No way, because the volume, the amount of transaction is huge. It's beyond human control. You cannot write down every single amount on piece of paper, and it's too many. Before it was only few companies who used to do the trading. Now it's millions and millions in business and billion pounds trading every single day. So who's going to do that now? Hence the reason we got a good friend who came out to help us. That is called ELOB, Electronic Limit Order Book. So you'll see on the graph how does ELOB exactly work. You can see there is a 2 column, the buyer column, bid column, the seller column, ask column. So what it does, when you press any order, it automatically matches with the seller price. So that happens when you place an open order. But if you place a limit order, then what he does, he doesn't directly go there. He waits for the target you fix. Let's say you wanted to buy a certain amount on a certain price, then he will wait until the price come to that level. Then he will place the order. That's how it works. So basically, we are the normal trader who we buy stocks. We don't place any limit order. We just place an order. ELOB try to complete the order in the lowest price. So hence the reason when you buy any stock, you will see the platform doesn't allow you to order 100% money you have. Let's say you have £100 on your account. It wouldn't allow you to place an order of £100. They will keep always 10% in the hand, because it doesn't really guarantee you will have the ELOB will match exactly the price you saw on the computer. It may go a little bit higher, or it can go a little bit lower. So you can see on this video exactly how it works in a real life computer. This is a live trading on ELOB, and you can see every second there is a signal, the price match, and there is a trade. So that's how it exactly works. Now the next thing you would come into mind, so how the price been determined? Why is it going up and down? Is initially people used to say, and there was a misconception about this. People used to think broker who manipulate or who decide the stock price. That's not true. It's completely dependent on supply and demand. So I'll give you an example. I mean, from like any other normal transaction or any other business in real life, you see the price is always been determined by the supply and demand. If the supply is more than demand, the price fall. When there is more demand than supply, then price goes up. So I'll give you a real life example. I have 10 Apple share and you want to buy Apple share. Okay, so let's say at the moment the price is $130, and obviously as a seller I don't want to sell in 131. So what would you do as a buyer? You try to increase the price. So there will be a price. When you increase it, then I would think, yes, this is the point of where I want to sell. Then I will agree to sell, and the transaction will happen. In the computer, it's exactly the same. When there is too many sell in order, then if there is buyer is less, the price go down. If there is more buy in order than sell, then price goes up. Next question may come to your mind: the price, can that be manipulated? I would say yes, but it depends on the size of the company. If it is a big company, it's quite difficult, but if it is a small company, it can be easily manipulated. I'll give an example. You all know Kodak. Kodak, what sort of business they do? Because their film business is not going very well, they wanted to be more of like a chemical company nowadays. So last year, because Donald Trump administration was rushing to produce vaccine, and they wanted to speed up the process. For that reason, they made an agreement with Kodak. They will be making components for vaccine, and the Donald Trump administration will give him $750 million loan. So what happened is, when the deal was almost completed, then insider people, they knew that deal is almost done. So what they did, before they declared the news on the market, the share price gone up like 500%. And the day news came on the market, that day the share price gone up another 200%. So then SEC started investigating why the share price went up so high before even the news came in the market. So they started investigating inside, and they came to know the director was buying huge shares, like 11 million share, one of the director. Hence the reason the price went up so high. So then because of that, it was deemed as not ethical. So they stopped the loan. So they didn't get the loan yet. It still is under investigation. When the news came in the market, they ain't gonna get that loan, then the price really went down again. So people who invested on a high and the price gone down, they must have lose money. So that's how the share price can be manipulated at times. Hi guys, hope you like the video. If so, please don't forget to subscribe and press the bell icon.